Good morning, everyone, and welcome to the European crossover webinar. And I just had this out here for the data. We did get German employment data, came in a negative 10,000, and let's scroll up here. The German import prices came in weaker, which is not a surprise. I mean, considering the difficulty they've had for several months. And bear with me. Did get coming across the wires, German CPI, Bavaria 0.7. And there we go, right in here. Oh, that's CPI down there. I don't know why it's not showing here the for Hess. That one's coming in. But anyway, bear with me. Let me check something real quick. I just had a DM from a great guy, IUU Bob. If you, so I was just seeing that, I just noticed it. Anyway, so we did get this German data. So we did also had consumer spending out of France. We do have Mexican CPI coming out. Not Mexican, what am I saying? Trade balance CPI, here's Mexico. And then this is Italian CPI. That's going to be out at the top of this next hour. And then we do have preliminary CPI out of Germany at 7 a.m. Once again, Central Standard Time. I'm in Texas, so I have Central Time. So if you're in the East Coast or more people are comfortable that are outside the States looking at Eastern Time, then it would be 8 Eastern on the German CPI, 8:30 Eastern for personal income and consumption here in the States, along with core PCE. And then we do have Canadian GDP at the same time, along with the producer prices, which will be out at 7:30 Central Time / 8:30 Eastern. We do have Shy PMI, comes in at 9:45 Eastern. I think if you're in the States, or at least in that area, you used to call it Shy PMI versus Chicago PMI. But anyway, Mox Nix makes those difference. Anyway, we do have a final reading on University of Michigan. That will be here in a moment. So that's about it. Let me go over this. Today's going to be, I want to say action-packed. It could even be a little bit of a long webinar because of everything that's going on. Obviously, we're seeing big things here in the equities. Now, one of the things I've gone and included, it's going to be part of the webinar going forward. Obviously, it's going to be the coverage of the S&Ps, the gold, and the crude. Now, I've covered crude before, and sometime back S&Ps. The thing with, I can't, let me go back over here. For those that may be new or trying out the trial here with ForexAnalytix, let me move this out of the way. Bear with me. So here's our bias chart, and just to go and touch base on this, because I know that we do offer the recording for public viewing, but it's much later in the U.S. session. So obviously, you want to go and get a chance to see where things line up or stack up. We do the webinar at 4 a.m. Eastern, but Stelios makes the recording available about 90 minutes before even the U.S. Open. So you don't necessarily have to, be watching it at that time. But the analysis I do is very, very short-term oriented, almost like a scalp type thing, although many of the traders here that do not scalp will use that or incorporate the levels with their own trading for entries or exits. But once again, we set up those levels. So what we're looking. So yesterday we were looking at 957. Honestly, we got the euro to go and push up, higher than that. We said a little bit of a stretch area was going to be 980. But anyway, that being said, it's set up on very, very short-term scalp / day trading levels. They're basically good for the next 24 hours, maybe 36 is what I'm kind of looking at. Now, going forward, let me move this out of the way. This will be a part of the webinar going forward, which is coverage of the S&Ps as well as, I can shift to another page, and I'm going to do that at this time, as well as the crude and also the gold market. I primarily scalp my own self. Obviously, I think you almost have to be doing that these days now with the way S&Ps are trading. But once again, like I said, I focus on short-term / scalping in the crude oil, which I haven't done anything in the crude oil for about, I don't know, about a week and a half or something like that. I was actually looking at it today and was setting up some levels, and I'll be doggone if I didn't miss a nice little run. This, I think it's right here, this first run, yeah, here, right there, 29.40. You can see we had a pretty good dip, and I was over there fooling around with that, and I looked, and before I knew it, we were already down 8 or 9 handles, and I was like, I'm not going to get into that. It's too late. Well, obviously it kept on falling. But anyway, that being said, so this will be a part of the webinar, but as we've done the last few times, I'll cover it at the end. Now, what we like to do is, as you know, or you may not know, we do like a little flyby. Like we'll go and look at the majors. We kind of hit, oh, this was going on with the yen, the euro, blah, blah. And then we go into a story like, you know, off the news wire, off of a Reuters, touching a couple of things. And then we cover the cross rates. Well, what we'll be doing is the same thing, because everything's moving so fast, especially with S&Ps. We'll do our little flyover with S&Ps, probably gold. I don't know about crude oil. Crude oil is moving, but we'll get to that later. And then at the end of the show, not the end of the show, but the end of the analysis, which covers, like I said, the majors. You can see those, this top portion, and then of course selected cross rates. So then at that point, then we'll come in and we'll do more detailed analysis on the S&Ps, the gold, and also the crude. So here we are. Let's go and do the little flyby here on the crude. I mean, not crude, but I mean the S&Ps. So potentially, this is what I think we could potentially go to. We're going to spend a little bit more. I mean, I'll go into a little bit more detail. Look, all I do is scalp. Okay, so I mean, I'll look for levels to go to, and I may have some scenarios laid out. But all I'm doing is just trading from level to level. That's it. It's just, it seems like right now it's more wider because of the amount of volatility. But I will lay out scenarios, you know, where I think a market's going to go to. I did that yesterday, and then the market, I mean, actually, I think it was, we've been moving so fast, but I think it was like, well, I thought we were going to get to 30.26. I didn't get long at 30.26. I think we got down to like 30.09. We came back. Fortunately, I held it, but I scalped out, and then I kind of danced around. But we got up to 30.95, and then the doggone thing, you know, rolled lower. I mentioned to the guys in the chat room, I didn't think it was going to be very good to be trying to get into this thing later in the afternoon. I think it'd be a little bit dangerous. And sure enough, we saw it fall off, but I didn't think it was going to fall off as much as it did. But point being is, I will lay out scenarios and levels that I want to engage, but all my trading is just scalp trading / very, very short-term trading. And why? Because of that and the inherent volatility that we're seeing with crude, gold, and S&Ps, would make no sense to put these levels, because the levels are changing in a dynamic fashion. So with that said, we will be covering, this will be a part of the webinar going forward, which is going to be the S&Ps, the gold, and the crude, but it won't be on the bias chart because the movements are just too far. I mean, you know, they're just too wild, you know what I mean? So, but if you're in the chat room, we do go in and mention those levels and things like that. So certainly an inducement that you're going to go and try ForexAnalytix for $1 for 10 days, see what it's all about, have access to all the analysis. But let's go and do our flyby with the crude, with the S&Ps. Obviously, big day today, so our webinar is probably going to run over, may very well run over an hour. So let's go on and get to that. One moment. So doing the little flyby on the spoofs, I think that potentially we may find ourselves here later today in the US session. And boy, we're already weaker in, you know, since Asia from the get-go. We kind of danced around up in here, but boy, we're still pressing lower. I think I mentioned in Asia a good little level, which was 29.20, I think it was 29.22, I think I mentioned. And then we rallied, I think about 20 handles or something like that off of that. Everything's moving so fast. But anyway, so here we are now, we're even lower. But here's my thought process on this. We'll do a real quick flyby, and then we'll hit the other analysis, and we'll come back to this. Yeah, you know, one of the things I was mentioning to the guys in the chat room, I even have a VH recording of how everything played out back in 1987. But just to give you an idea of what my concerns are, and I had mentioned that since the beginning of the week, not that I prognosticate for any levels or whatever. My thoughts were, so many people long, you know, in their 401ks that I'm thinking people might say, you know what, let me just go in and get out and protect some of my profits. So I think we may see further selling. But anyway, that being said, going back to 1987, I was discussing with Stelios and some of the people in the chat room, was back in 87, the week, because, you know, Black Monday, but the week before, which would be the week we're in right now, the market swung up and down, up and down, up and down. And so when we got to Thursday, one of the traders was talking about it in retrospect. He said, you know, if we would have rallied on Thursday, and he goes, I really would not have known what to expect. He goes, but what happened was, he goes, on Thursday, we actually went up and down, and then we finished the day at the lows. This is exactly what just happened yesterday. He goes, at that point, I knew we were going to go lower on Friday. On Friday, they just saw constant selling. Now, they didn't have electronic trading like they have now, but from the get-go, he said it wasn't like massive, but it was just down, 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 down. And the last 90 minutes, boom, we hit the air pocket. Now, there are different dynamics, because back then, Baker, the Treasury Secretary, was, I guess they were ticked off about where the dollar was, and they were going to let the dollar just fall. So that really, and also interest rates are pushing higher. Obviously, different situation than we have now. But once again, what we didn't have, which we do have now, so many people involved, and a lot of people with their 401ks, you know, just, you know, making the all smiling, glad. And I'm thinking, they've seen some big moves before and they've come back. But at this point, this is kind of scary. Plus also with the concerns with coronavirus, it's not something you can lay your hands on as far as making a determination as how bad something can get. Hopefully it doesn't get way out of control, but I think it puts a lot of fear in people, and potentially we could see this definitely get down here to this 50%. And that template, and I was mentioning Stelios, you know, the markets like to repeat themselves. We even have the template. I mean, the thing is, even back then, the week, although the week was up and down of that week before Black Monday, this one has not been an up and down. It's just been down, down for the most part, although the Thursday matches up being up and down, and then finishing it late day, coming off, you know, we rallied from that 30.20, I was saying 30.26, we got as low as, what was it, 30.07, and then we rallied all the way up to 30.95, and then we came down to 30.42.45, and we just sat there, not doing like a bump on a log. And then we just started going, and then boom, 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 the bottom starts to, you know, we really start accelerating. But it's playing out the exact same way. And now we come into a Friday, and, you know, you have to be careful on a Friday. My concern is you're going to have people saying, you know what, just get me the heck out. I'm not going to risk any more of my 401k. So once again, I think we may come into Friday, well today, but in the U.S. session, selling, and then watch for that freaking air pocket. And we may already be here at this point, but I don't know how much further. I mean, if we get down here, I was doing the levels last night, but this would be 28.22. Holy smokes. Can you mention that? That's 100 pips. Well, actually 200 pips, 200 handles from where we were yesterday. Because remember, I was like in that 30.26. So anyway, there we go there. What I'm going to do now is let's go on and hit the news. I only have a little bit of news. We'll get into the FX, and then we'll come back. We'll do some more detailed analysis on the S&Ps. We'll touch into gold, and we'll go into crude. So let's go on and move on to that. Okay, here we are in the majors. Things are happening so fast, the time caught up so quickly that I didn't even get a chance to, usually I'll put the stories on the, that little service I use, whatever you call it. I forgot the name of it. What's it called? Holy smokes. Twit Longer, that's it. It's called Twit Longer. But anyway, so I'm just going to go and pop up the story here, and we'll read it off of that. Let's see here. So euro dollar volatility jumps to one-year high amid big FX moves. Now, like I said, once again, if you're trying this out for a trial or you're just watching one of the recordings, I usually just hit like a couple of news stories regarding FX, and then we roll into the analysis. Kind of provides us a flavor. Well, we already know what's happening right now, so there is the flavor already. But we'll still hit this anyway, just maybe just one story. I do see something about the Aussie dollar, so we'll probably touch that. Market gauges of euro-dollar one-month volatility jumped on Friday to their highest in over a year, 6.6%. The Japanese yen appeared to have regained its safe haven status after last week's brief wobble, rising to a 3.5-week high of 108.79 versus a dollar. The euro is up at 10.28. a 3-week high in euro-dollar volatility, which fell to a record low just last month below 4%, has now surged to 6 3/4, the highest since last July, having ended last week at around 4.8%. The greenback had strengthened recently, but since handed back those gains, a money market's moved now to price in a 25 basis point Fed cut by mid-year. And lastly, we'll just hit the Aussie dollar. I think that's key. Hang on. So the Aussie and New Zealand dollar suffered the world's woes, and bond yields hit record lows. And that's why I want to touch on that, because those well, we know it's going across the board, but the interest rates in the Aussie are even, keep an eye on the SPOOs, they're 29.02 right now, 29.2 3/4. The Aussie and New Zealand dollars were heading for another week of losses on Friday as fears of the health of the global economy fueled the aggressive rate cuts and drove local bond yields to all-time lows. The only saving grace for the Aussie was that the markets reckoned that the U.S. would ease even more drastically than Australia might, so restraining the U.S. currency. That still left the Aussie huddled at 65.50. You know, we've been looking for 65.28, which is a weekly support. Just a whisker above the 11-year trough of 65.42 hit on Wednesday. The Aussie also took a beating on the euro, which jumped to a 7-month peaks at 67.63 euro odd. That's one of the cross rates we do cover. Both currencies have been dumped as investors worried the spread of the coronavirus would do significant damage to the world economy, a major negative for countries that rely heavily on resource exports and tourism to support growth. Fragile industrial commodities and China travel ban threaten each of Australia's top 5 exports: coal, iron ore, LNG, education, tourism, pointing to a collapse in the trade surplus. RBA's growth optimism lends out some support with a low risk of easing near term, but we still see 2 rate cuts this year. It was just a couple of weeks ago that the RBA was arguing that the coronavirus would be temporary jolt and the economy would still accelerate this year. So I don't want to spend any more time on this. I just wanted to hit that quickly. Let's go on and move on to the analysis now. So once again, for those that may be new or watching the recording, so what we do is we start off with the euro and then moment. So here. So here we go. So the euro rallied on Thursday, extending the recent gains as the dollar's bid waned as U.S. Susceptibility to the coronavirus increases. Euro resistance key level will be 10.20. Well, we're actually at 10.05. Will be 10.20, followed by 10.57. Support will be 9.57. So here's 10.20, and we're looking at 10.57. Yeah, so we've already gone above the 10.20. That was key here. But obviously, the concerns with the potential for new coronavirus cases, we don't even have that many, but the potential is we may get them. Now the dollar's going to start to pare back some. And also there's concerns that the Fed may cut, and if they do, then that takes some steam out of the dollar. So you're seeing a bit of a more extended move here in the euro. It seems a good move, and I got to argue it. I mean, not argument. I got to acknowledge, because I've been kind of dogging the euro, that this is a decent gain. That's not a huge gain. I mean, you would think if you look at it in context, you're like, you know, you're thinking, well, that's not that big of a gain. You see what I'm saying? It's not like as if we took off to the moon, but it's still a gain nonetheless. So when we look here, we're looking at this level here, and that's 10.77. Now, what we did have earmarked off, what I did was right here at this level, not a 10.57. Here's the deal. I think that that is a good level. But if we see further weakness in the U.S. equity markets, the idea is that the Fed probably will do an interest rate cut. If they do, then the market's probably going to go with that. Not to mention, can you imagine anybody that's short here in the euro that's saying like I myself yesterday said, oh, it's a dog with fleece. So I haven't done anything with the euro in about 3 or 4 weeks, I guess. But anyway, let's say that I stepped in and said, oh, I'm selling it. It's a dog. So I'm going to sell it here. You know what? No, I'm selling it here also. Well, then at the end of the week, you're like, man, I got to get out of this thing. You see what I'm saying? So potentially we can go even higher. And because of that, I'm going to go with that 10.77 right there. So we're actually we'll stick with this part, 10.57, and we'll say 10.57, 10.77. So there we go. $10.77, I think, on the squeeze, because if they say no, we're so weak right now, U.S. equities, the Fed's going to be cutting. Like if we get to the 50% in the spoos, then they're probably thinking, you know what, they're going to be cutting for sure. So, and we do have to change the bias now, because certainly have to give it its credit. It's bullish. And then for support, we did have it here at 957, but I think that's too low in light of everything. So it's going to be right there. You see the pink line? That was going to be our stretch level for yesterday. So that is going to be 980. And let's go move into the cable. So cable closed slightly lower in a tight range on Thursday. Resistance on Friday will be the pivot, which is 29.80. You can see that red line I've got there. Whenever I do like a pivot, like a major inflection point, then I'll do it in red, or we call crimson, followed by 30.08. Support will be 28.42, followed by 27.71. Well, we're going to go with the 28.42. We already have that. And there's a pivot, 29.80. So we're just going to go on and stick with that. That'll stay the same. I did put it as bearish now because it's below the pivot. So with that, let's now go and move into the Aussie dollar. Wow, we got there, the 65.28. That's my weekly support level. Actually, I've had that in place for a target anyway. You see that? Aussie managed to hold the lows on Thursday despite bond rates continue to slide with increasing potential for an RBA rate cut. Weekly support level is 65.28 and is the immediate target with resistance at 68.28. So let's go into the weekly chart and you'll see where I came up with that. There we go. $65.28. Now, that being said, that's one of the reasons I touched the stories on, is that, remember, we were saying that the Aussie, I'll show you why, it kind of gives us a little bit of a flavor. So we're going to keep the 65.28. So bear with me. The reason I wanted to touch that story because of the bond yields. But one of the things it was saying here, was that they think that the U.S. might, if the Fed cuts, it may even end up undercutting from where that the RBA would price in. And with that, we may, I believe, see the Aussie kind of hold this level in here. I'm trying to find out, I don't want to spend too much time on this, but let me see here. Anyway, oh, here, June, thought I saw it here. Anyway, they're looking that one of the reasons is that we may, with the Fed potentially cutting, that it may even see it's going to offer further weakness, not for the Aussie, but the dollar. So with that, I like us just holding this area. We're going to hold that for support today, which is that weekly level. You can see it here, 65.28. Let's snap this back to the daily. And for resistance, it's going to be right here. You see this low here, kind of confluences here with this high. That's going to be our resistance, 65.82. Obviously bearish. Well, we're below 2,900 right now. We're 28.97 in the spoos. And you got to think, retail investors, I mean, those with 401ks, and I'm talking about, you know, we're all retail investors, but I'm talking about those with, we're now 28.95 and 3/4, are going to be getting the heck out of Dodge, I would think. I mean, at least that's the way I would want to play it, and why I think we're going to see that pressure. And the template, as I mentioned at the beginning, is matching what happened in 87. Not that I'm seeing in 1987, but I'm just saying this increased selling. You know what I mean? Where the Thursday matches up perfectly, where it swung up and down, and then we sold off at the end of the day, which is exactly what happened yesterday. And then Friday just selling right from the get-go. continuous, which is kind of like what we're seeing now, and then they hit the air pocket. We're 28.94 right now in the SPOOs. Now let's go in here with the Kiwi. So the Kiwi remains pinned to the lows, and concerns increase with the coronavirus, and latest economic report was weak. Support is now going to be 62.89 with resistance at 63.52. Well, we're already below that, and SPOOs are really coming apart now, 28.92 now. And I do not like to trade when I'm on the webinar, so I just have to just wait. So let's go on, and here's this key level here. $62.04. We will go with that. That's going to be a weekly. Oh, that's a huge level. So 62.04. $28.91. Holy smokes. It's going to be an ugly opening here in the US. Trying to look for some resistance on the upside. It's going to be right there. 62.75. We'll give it a little bit more room in case we do see a rebound, which would lead us into Monday. So it's going to be 62.86. $28.89 right now. So the dollar CAD climbed above the immediate resistance and was well on its way to the intermediate target of 34.35. We're actually even above 34.35 now, which will be Friday's resistance. Support will be 33.56. Well, we're even above the 34.35. So this thing is blowing and going. You'll see this react greatly when the U.S. equities are under pressure, and we're seeing that. Right now, we're 28.87 on the SPOOs. So resistance is going to be right there. You see that? We'll call it 34.61. And support right there. See the line come across? 34.09. Going to the dollar peso. Holy smokes. Well, they said, holy moly guacamole. Look at this thing. My goodness gracious. So the dollar peso added on to its recent gains. Intermediate target is the key level of 1962. Yeah, I bet that must have hit it already in Asia or something. Support will be 1938, followed by 1932. This analysis I do is that you can see why it's marked the Asian session update, because I do that at the end of the US session or not too long afterwards. But before the Asian session kicks off, and look at this thing, on frickin' fire. Resistance is going to be right there, which is where we're at right now, which is 1982. Problem is, we can still sell off in the U.S. equity, so we're going to have to just go with 1995 on a stretch right here. Unbelievable. Support is going to be right there. 1973. But I think you have to give it a little bit. I think that is good, but I think in case we do get a bounce here in the equities, which I'm not sure that we will, US equities, it's going to come in right there, 1968. Let's now go into the dollar yen. Well, this thing has now, we got down to the pivot, and now we've even broken the pivot. And you know how the dollar yen, and this has just been a surprise. And we'd rallied up in here. And remember, I told you yesterday, well, we're not that much difference other than this move up here. But I thought, well, here, I told you, I think I mentioned here yesterday, was one of the concerns was that, oh my goodness, we're already at 28.80, 28.79 now on the SPOOs. And I've got the 50% at 28.64. But the concern is now that I think that the reason it gave up all these gains also was BOJ Governor Kuroda already said that it's too early for them to take any action. And I think they will take action. And if they do, I think it could send the dollar in smoking. But for right now, it's going with the strong safe haven status. So we're going to have to go down here where we get all these touches, and that takes us down to 837. So we're going to have 837 for support. And on the upside, it's going to be right there with these touches. 901. We'll call it 902. People see this US Open, they're going to be, I just think it's just going to be more selling induced by 401k liquidation. Let me get into dollar index. I am seeing some volume build up here at 28.85. I'm going to mention this in chat room. So we are seeing this thing slide. The key level is going to be this weekly level, 97.89. Huge weekly level. That'll be bias chart support for today. And resistance coming right across there, 98.25. It's just about to lose its bullishness, but we'll keep it there for now and then move into the cross rates. What the hell? Going it. There it is. Okay. So now looking at the Kiwi Yen, holy smokes, boy, that yen is really appreciating like nobody's business. And considering the vulnerability that the Kiwi has, we're going to have to make it this level, this key level here. It's really overdone, but we could, if U.S. equities continue, there is some support right in here. You can see these touches come here. That's 67.61, but my concern is that they'll make a move down here, which is going to be 67.15. There, exactly like that. And for resistance, $68.68. Euro yen, we have the euro strength versus the yen strength, so it's kind of a tug of war. We're going to keep it simple. It's right there. You see this bar right there where it closed? That's going to be it, 2051. And support, once again, we're just going to keep it simple at the bottom here because, like I said, it's a tug of war between the yen and the euro because we are seeing some euro strength, but at the same time we're seeing yen strength, but really it hasn't. It's the euro still held its own overall, so we're going to just go with the lows here, which is 1963. Let's move into the euro odd. Holy smokes. Well, we know how weak the Aussie is. That tells it to you right there. And you can certainly see what they want to move to. Which is going to be 170. Wow. What a move. That's why, folks, I mean, if you're not used to trading currencies and you're looking for something, you can't go wrong with some of these cross rates. You get to, now this one is bowling you over if you're on the wrong side, but I mean, you think about it, you have to just look, as you know, the Aussie's weak and now the euro's gaining some strength, so it's just really just zooming and running away with this. It's going to be 170, so put 70 even. And support. Right there, 6804. You can actually even go right here. It's off of this low right there, 6802. I'll go with that, 6802 if we see a pullback. Bear with me. Okay, I just got that across the squawk in my ear. Another coronavirus case in the UK, bringing the total up to 17. And I wanted to note that because Amanda is from the UK. The Euro Kiwi. Okay, and let's take it. Obviously, the same thing. One moment. And just letting someone know about the webinar. Sorry about that. Just had to make a comment here in the chat room. So, boy, look at this Euro Kiwi. I mean, it's even worse than the Aussie. I mean, if you're on the wrong side. Let's go and move into the weekly chart. Man, oh man. So this would be your resistance right here, right there, which is going to be 77.01. These are some big moves, folks. I mean, God, that's on a weekly. But when you go and take a look at this on the daily, look at that. To the moon. Support, well, you can see right there, it says previous resistance, which is going to be 76.04. And let's go and move into the Aussie Yen. I think this has probably exceeded the 161%, but we'll take a look at this. Bear with me. Yeah, it just exceeded that. And actually it's at 71.05. So that's 71.05. You know, at the end of the week, people are just going to, you get out of the way. You see what I'm saying? And because you get out of the way, the market is aware of that. So you'll see these moves accentuated. So right now, our resistance, I mean, our support is going to be right there, 70.68. Resistance, let's go to 2-hour chart. Right there, those two highs coming across here. We'll actually go right there, caught there. 71.33. And let's go move on to the guppy. Well, Sterling's trying to make a little bit of a stand. You can see here we're going to this 38%, and we did not make it there. And it's 39.77, and we're going to go with that. 39.77, which is basically in the middle of this range. So we're going to go with that for support. Resistance. You can see these little touches coming across here. That might be a little bit ambitious. So let's take a look at this. Oh, we hit the 127% extension here. Also, look at that. Really nothing until you get up there. Well, we're going to go with that. We'll go right here with this low, which would be 40.82. And let's go sterling odd. I'm surprised that there isn't even a greater gain considering the weakness of Aussie. Although once again, about that. Once again, sterling's been a little bit on the weak side this week. I just don't know if it's going to make it all the way up there. Now, that's a good 100 pips. I'm just going to go with the high for today, which is 97.75, which isn't bad. And support. You can see that coming right across here. It's going to be 96.89. And that covers FX. We'll go back to the main page where the majors are. You can see here that the euro just tagged 1053 and we had 1057. It's easing back a bit. Hit 1057. That's on the 2-hour chart. So you can see that right here. With that, let's go and move into the SPOOs. SPOOs are actually now 29.14. So, oh, holy smokes. Look, you know what? We hit that 28.85. Once again, I was doing the webinar. I didn't see that. Doggone, we hit that level. I don't know if anybody saw that in the chat room because I did post this chart, but that was a good area for them to cover. That was a good area. I don't know if anybody took advantage of that. So you can see here, there's 28.85. Probably going to get a little bit of a bounce from here. We just hit 29.14. We backed off a little bit here. They just took it out by just a little bit. Yeah, they came down to about 28.78, and you can see this move here. That's on the 1-minute chart. And got some resistance here, 29.14. We just got above it, so maybe what you want to do right now is take a look at it on the fib. It actually responded to the fib well earlier. Yeah, and we just hit the 50%. So a decent area for them to take a pause. But here's the deal. We hit some key level, that 28.85, and wasn't that far away from the 50%. So my guess is we probably want to smoke it a little bit higher, and you'd probably make a run for this level here. We'll actually mark it off. Okay, bear with me. Yeah, one of the guys in the chat room was saying, hey, great call on the S&Ps. Because of that level, I didn't even, I forgot about 28.85. But anyway, let's go mark this off here. I guess we can keep it a solid, more thick line. Yeah, someone's asking, I don't know if Takis is looking at the webinar, but here's the level. And I shared this chart right before I came on the webinar. I actually shared it before, but I reposted it. And we were talking about potentially it's going to 28.64, the 50%. And on the webinar, I completely forgot about this level right here. And that will, I wouldn't mind jumping in there because look, you weren't risking too much from that, just going sub there in this area here. Nice little rebound, but anyway, it is what it is. But that being said, you see how we dipped below here, not that far from the 50%. I think we can push up a little bit further. So how far would that little bit further go? Well, let's take a look on this 1 minute chart because it's reacting very well to 1 minute chart. I don't even use 1 minute charts, but the way these markets are moving, I think you have to. So we did get above the 50%. I don't think we're going to pull back too much here. We may try and make a push. If we don't pull back, then this 50% didn't hold it, and then we can make a run up here to 29.22. If we do pull back down here, then generally when you get to 1/5, it doesn't go to the next one. It jumps beyond that. And the next one would come all the way back up here. But that'd be a hella rebound, a hella rebound. I think that if we were to get it up to here, I think you would see some supply develop. I mean, like where, the people would gladly unload against this level, which would be 29.27. So you can see we made it to the 50%. If we come to the 38%, that's not a real rejection because we've only just come back and you could still come up to here, come up to 61% and fall back. If we do slide back and we come all the way down here and go below 2,900, then the 50% did hold. So if you were to go back up and tag the 50%, it's not going to stop at the 61%. It would definitely make a move up to the 78%, and that would confluence it with this level, which would be 29.34. We'll see. But if it just pulls back to the 38%, then that doesn't mean that it's held. You'd have to see this really come off to say, wow, the 50% held. All we do is we'd just be easing back. And if we come back here, we can make another push, which would challenge us here at the 61%, which would be 29.21, called 29.22. And then you could fail back and then come back down to the 38%. Then that'd be worth it. But like I said, in order to say the 50% held, you have to have come down here and made a move down here to say, wow, it rejected at the 50%. Okay, that's there on that one. Let's go and move into the 30-minute. Now, here's the deal on the 30-minute. On my exponential moving averages, it's still in sell mode. Look at that thing. We got one little fake here. Look at it. This thing has been in sell mode from there. Probably doesn't sound like much because we've been moving lower, but look, that we did get a little bit of a fake out here. And then we came back down. Now, what I always mention to people is I like using these exponential moving averages. I use a 9 and a 27. But the thing is, whenever you get like a little fake out and it comes back, that usually portends for another new significant low. And the thought process behind that is like, so let's say you're short, you're short. And let's say some people go, oh, wow, I'm getting long now. If they see this fail, they're going to have their stops just below here then. You see? And so that's why generally you'll see a more extended fall when you see like a little fake blip and then see the market roll over. And then you can see once it did that, it came back here, doesn't cross over, comes close, doesn't cross over, and still in the sell mode. Now in the 5-minute, we did get a bit of a buy mode, but once again, we're looking here on the 30-minute, and I like to stick with the 30-minute to give me it helps keep my mind as to where the overall trend is. You see what I'm saying? Hard to say, okay, we all know the trend is lower because we've been going through this week, but I'm just saying is on a, outside of something like this week, it helps me so that I don't, come into a market or try and chase a market where we go, oh, wait a minute, it's still in a sell mode. Look, should find some resistance here against that 29.54, and I try and tie that up. So maybe all the way up in here, it could overshoot it, but as long as it doesn't cross over, then it's still in a sell mode. Moving on to the 2-hour chart, nothing definitive here on the 2-hour where I came up with this level here was on the daily. There's that 28.85. And I always like to put my levels across the bodies, because to me that's where the volume is. That's why you rarely see me put them at peaks, because that's where the real volume is. Now, if you're day trading, and when I say day trading, which obviously all of us are probably because the moves are so wild, but I'm saying generally you see like an employment report, FOMC announcement, then you go with those highs and lows as your key resistance. As the market just breaks or employment report reacts to a news event, then you can go off of that. So this is what I'm looking at right now. Potentially what we could come down to is a 2864. We came pretty close. So what could happen is we might do data around here, and then maybe eventually later in the US session, we may break through that 2854 and try and see how low we can go. But we'll see how that plays out. So we've already seen quite a big hurrahs already with the S&Ps. One moment. One of the guys in the chat room was asking me about the euro. Yeah, hang on, let me go on. Oh, DK is asking about the euro. So he was mentioning about the euro. So I'm just going to cover the euro real quick because we are getting a turn. Well, not much of a turnaround. It's just kind of making a pause. But like I said, we've covered what we could on the SPOOs. Now, one of the things I was looking here on the SPOOs is I mentioned a little bit frustrating is I was fooling around, I was dickering around with the doggone crude, and we rallied up to here. You see, that's the VWAP, volume weighted average price. And look, we got a nice turnaround. And I hadn't traded the crude in about 2 weeks or so. So I was putting in some levels, and this came up so fast because it was right here. And I go, okay, I'll probably take a short if it comes up to the VWAP. And I think I was looking at also a price level there. I think I had 29.38, which actually made it right there, 29.38. And then next thing I know, I look and when I look over, it not only hit the VWAP, it's already down to like 32 or something, or 34, and I'm like, oh no, it's too late, which obviously it wasn't. It just kept falling. But let me go and move on to the real quickly to the euro. Let's just jump into that, and then we'll get into gold and crude. There we go. So on our bias chart, we had 1057. We said, hey, it could make it up to 77 on a stretch. But let's go and take a look at the daily, and then let's take a look on the 2-hour chart. And DK was making some comments about some touches on that. So one moment. Okay. So he's popping in right now. So the way I came up with this 1057, I tried to go with the touches coming across here. But really where we saw that, and we were looking at that right now, was on the 2-hour chart. Let's go and move into the 2-hour chart. And we covered it right before we came into the S&Ps. And you can see here the line coming across. And yeah, I mean, I mentioned that what I like to do is, and it's actually, you know, DK's right. He mentioned the 1053 because that is my level. But on the bias chart, I had 1057 going off the daily, but the 2-hour level, one moment. So here, if you look at it on the 2-hour chart, which is what I use as my longer term, I don't use 4-hour charts other than with the bonds or let's say boons. Look at all these touches here. Look at this. You see that? And the market, I always go to the bodies. If you do the most bodies, that's where the volume is at. Because one of the things you know is in FX, unless you're trading the futures, we don't have any volume that we can go off. So I like to put my my levels through the touches. And I think DK had remembered that because he mentions 1053. I'm like, okay, well, I had 1057, but yeah, I guess that's close. Yeah, sure enough that it was. It hit the 1053 right on the nose on the 2-hour chart. I mean, I used to love trading the euro, and the euro was an exceptional day trading market. If y'all remember back in the day, like 5 or 6 years ago, the average, the ATR was 130 or 126 pips. So, man, can you imagine that intraday? And you're just trading FX? Oh, my goodness. I mean, you had some great moves. So I hope it does come back to that. But, yeah, what DK was referencing, and that's correct, 1053 is the level on the 2-hour chart. And look, the market went right there. Now, once again, here's the thought on that. I was going to tell DK, and I think he's listening now. Here's my concern is on the euro, because I think it got a ways, but here's the reason why I think it potentially, if you look on here, we have the bias chart here for 1077, is the reason is because and we touched that on when we were covering the Aussie story. The thought process is that the Fed is going to go in and cut. So if they're going to cut, that's going to take some additional strength out of the dollar, and because of that, we can push up to 1077. Also, what we were mentioning is anybody that got short the euro and I myself was saying, oh, it's a dog with fleas, blah blah blah. Well, I mean, I haven't done anything in the euro for about 2 or 3 weeks, but let's say that I got short here, and maybe I added some more here. Look, the market knows that these people are on the wrong side of the tracks. So as we come into Friday, the market is just going to keep the pedal to the metal, because they know they're going to have an undertone bid. Think of it this way: if you're short, you're going, oh man, if I can just get a dip back to here or here, I'll get out. So there's going to be a strong undertone bid. So in all likelihood, the euro is just going to keep pushing higher. And if equities do weaken, you're going to see it push up closer to that 77, and there's that 77 right there. So just so that everybody's all clear on that one, but good thought process on that by DK. But once again, here the 2-hour, yeah, it hit it right to the level there at come back in. Let's come back to the 2-hour again, which was 1053, and you can see this 1053 goes back. I like to say it goes back to October or even longer, but goes back to since Moses crossed the desert. Look at that 1053. Look how important that 1053 is. The market does not forget. Look how far, it goes back to August. Look at that. It's been a significant pivot. Look at that. So anyway, now let's go move on to the crude oil market. Actually, move on to the gold market. So, man, I'll be doggone. Look at this doggone gold. Here's the deal on gold. We've had a pretty good fallback, and tell you what, I got short, and I was at my last ad was here because I thought I was going to get my block knocked off. Because look at the fall that we've had. We've had a pretty good fall. This part level here saved me because I thought, okay, I'll add one more time, and if I got above 1650. I was going to have to just bail. But you can see here the continuous fall we've seen here and how gold has not held up very well. I mean, look at this is on the daily, this move. And if you look on the 2-hour chart, it looked pretty sickly. You see here? And even with coronavirus and all that, it's been continuing to sell off. But we did go on in this morning. One of the guys was asking, and I said, he's mentioned about gold being under trouble. And I said, well, that's a pretty good level right there, 1619. And you'll see it right here. You see right there, 1619. We didn't get there, but we just about did. And one of the things I was thinking about, yeah, when it started to rally, I'm thinking, and God, I didn't even notice this because look, that was a nice little area right here. But I thought to myself, I go, I remember Stelio saying in the chat room, because everybody was saying, what the heck's wrong with gold? And he goes, oh, it's just overbought. They'll reload lower. And I thought, this is not a bad area, this 1970, because I thought in Asia session, I go, if it gives it, it's probably going to be a nice buy, 1970, maybe down to 13. So when we started to rally back, I'm thinking, well, this market's overdone. And look, and then we got what I was telling the guys in the chat room is essentially a Viagra rally. Holy smokes. So I'm thinking, oh, I see it moving up here, and I'm thinking, oh, well, if it gets up to 1636, you can see I've got the, resistance level up in here. You can see a reactionary level here. And I've got the VWAP here. You see that? At the time it was 1637. So I step in here a little bit early, which I shouldn't have done. I think I came in at 34, something like that. Then it rallies even higher. Then I came in at the VWAP, and then I had some more 40. Then I added some more, and I'm like, oh my goodness. I go, if it gets past 1650, I'm just going to have to take a pretty good sizable hit. But at the time, then finally this boost broke above their area, and we started to come down. Well, anyway, short story long, I ended up covering it all right here at 1637, came out, made a few nickels, but look, now we've turned around, fallen back down. It looked like it was going to start to keep on, it might make a good move here, and certainly looked like it had something to go and work with here. But anyway, that being said, gold's going to be a little tricky. I think that it is a buy if we do go on and slide back down here to 1613, that's going to be a nice little area. I think so. If we go down here, it's still acting sloppy. It still is. I mean, this should have held in here. It's still acting sloppy, but what it might do is, I think we cleaned out some pretty good people. I think the people actually loaded up in here. So if you come down here, watch the volume, I think you're going to see some good volume in 1970, and watch for potentially for the market to overshoot. I don't even know if it'll make it all the way to 13, but if it does here, I think that that's going to be, depending on what the overall market's doing, that'll be a good area where it could jump right back up and maybe make it up to 1627 within the same session in short order. Let's just go and move into crude oil, and we'll wrap it up with that. Well, crude oil finally woke up. I mean, holy smokes. This thing had been defying gravity, staying above 50 while the rest of the market was coming unglued. But we covered this yesterday. I don't know if we covered it here, but me and another guy were talking, Brock, and he was trading it. And I think actually, I remember yesterday I mentioned a comment in the chat room. I don't know if I was in the webinar or whatever, but I said, him and I talked about this level potentially getting down to 46.24, because 46.55 was 161% of this extension. So I happened to look over, I'm like, oh, wow, it hits 46.24, and I'm trying to see if I can get in, and it started just to take off. But look, we've even fallen even further lower here. We can go and take a look here on a weekly chart to see what else we can. This market is really oversold. It finally came in and caved quite a bit. Right, you know what, right there, 45.07. That is not bad here. 45.07. So let's go on in. If you don't want to pick it up now, you can probably wait till next week to see how things play out today with equities. But I think that's going to be a good area overall. If things start to quiet down, we may see a pretty good bounce back that should at least get us up to $48. So, and even then, you could look for this area, 47.17. So come on. I mean, you're talking $2 rally. If we can make it down here, I'm just saying is, I don't think you have to come in now because you probably don't want to hold it over the weekend. If we see further selling pressure, come in on Monday. But I think that that'll be an area for them to go to here. Haven't done anything with crude in some time, and it was kind of funny that this morning I was laying out some more additional levels, and then that's when I missed the moves and spoos are happening so fast, but so I ended up missing that. Tried to lay in some of these levels and trying to see what that's what I was laying all these out, thinking we're going to get a rally then. And next thing I look at, spoos already hit the VWAP and turned around and started rolling over. We are seeing a lot of volume in here. You see that? Look how fat these bubbles are. So we're seeing some pretty good volume. If you look at the cumulative volume delta, we are getting a little bit of a divergence here, but we've also seen this rally come up. But once again, like I said, a lot of it's going to be dependent on what happens here with equities. So unless you really specifically trade crude, probably best to just leave it alone until next week. I think you're probably better off trading the gold or the crude. I mean, gold or the SPUs, although, like I said, I hadn't traded gold in a little while. Jump into gold, and then I get that Viagra rally, and then I thought I was going to get smoked on that. But anyway, that's all we have for today. Thanks for joining us here in the European crossover webinar. If you're looking to listen to the recording, for $1, you can try out ForexAnalytix for a 10-day trial, have access to all the analysis, macro, basic, technical, Elliott wave, harmonics, the chat room, the webinar here. Like I said, it's available. We do the webinar at 4 a.m. Eastern. If you're not up, you may not be up, but Stelios makes the recording available in the U.S. 90 minutes before the U.S. session. So thanks for joining us once again. Good luck trading, everyone, and be careful out there today.